I opened my first crypto account at the time, and I was so close to buying when Bitcoin was like at 100 and I missed getting filled, and I think I had my order at like 90. I don't know what it was at. I mean, there's certainly, yeah. So people are people, right? Yeah. So they love you when you do well and you make them money. And then if you lose them one time, you're on their, what list, and you just kind of have to accept it, and you just do the best you can. I think that's the strongest thing. And that's in any industry. What you're doing here, it's you do the best you can, and that's all you can do. But as long as you can look yourself in the mirror and say, hey, I put it all in and I put it all out there, then if someone's going to get mad at you for doing something like when I'm doing a lot of these trades, I'm investing my own money. So it's like if I'm investing my own money and it loses, well, I lost with you. Like I obviously didn't put it out there unless I thought I was going to make money. Yeah, I think it was 2012 where I first started to kind of understand what Bitcoin was, and I love the idea because I've always been someone who's been like fiscally responsible. I think being a business owner, you have to be. Being someone who's in the market, you have to be aware of that. So I love the idea of the max run of 21 million being mined. I love the idea that it's an alternate to fiat currency, and I always hated watching the Federal Reserve. Like since 2009, when the financial recession, the collapse hit, it was all about just Federal Reserve printing. And it always bugged me because I'm like, wait a minute, I can't do that. Like if I take out a ton of credit cards, eventually they're going to shut it off, right? So we can't do that. How the heck can our government do that? And how is that sustainable long term? And so I love that aspect of Bitcoin of like, an alternative, a digital gold, if you will. And that's really where I thought about it. And I still remember vividly, and like I think it was 2012, I opened my first crypto account at the time, and I was so close to buying when Bitcoin was like at 100 and I missed getting filled, and I think I had my order at like 90. I don't know what it was at. But the bottom line is, it just went up, and I just didn't chase it, and well, the rest is history there. I did buy it after at certain pullback levels, like in 2019, 2020 and stuff, but I'll be the first to admit I could have had it at 100. Yeah, so I think it just kind of, for me, it was just that it did offer that alternative, right? So that alternative to what the government was doing, the idea that it can be transferred all around the globe so easily and so inexpensively, I think that's such an attractive thing. And I think there's a need in the world. Like every central bank is printing money just nonstop. And we now hear that the Fed is like pulling money back and they're raising rates. But let's be honest, we all know that at some point we're going to hit another nasty recession, and they're going to go back to what they know best, which is printing money. So even in this period where you're seeing Bitcoin drop, at some point the spigot's going to get turned on again, and they will start printing. So that's where Bitcoin gets very interesting. I mean, again, there will be a point. I'm not a hodler right now, but there will be a point where I accumulate when it probably gets down 20-ish, sub 20,000. So where I'm just like, all right, now we start putting in the big money, start putting in for the long term. I know, yeah. And it's funny because you go to the store and you're like, oh, a can of tuna still costs around this. But if you look at the size of the can of tuna from like 5 years ago, it used to be like this big. Now it's like this big. Yeah, I know. Yeah, it is. The prices have gone nuts, especially in the last year or so. And you got to feel for people out there that are in that position of I'm in a very well-off position and I'm able to afford the price increases, but there are a lot of people in the country and in the world that can't, and it's going to be tough times going forward for sure. Yeah, I mean that's definitely it's more of the online. Everything's going online, so they don't have to have as many locations. Obviously, having safety deposit, they still got to have those. I mean, that would be pretty messed up if they just closed those down and didn't give you your stuff back. But I think that the bottom line is we have to remember that the economy is driven by profits. I mean, that's the corporate kind of structure. And as it goes online and these companies have to make more money, they shut down locations, and then they don't have to pay the employees, they don't have to pay for the rent of that space, the lease of that space, and it basically ups their profit margins. So there's this, I mean, we definitely are in an economy that is profit driven, and that's what these stock prices go up on. And so that's unfortunately, I mean, it's horrible, but that's the way it is. I mean, everything's going to automation. And by the way, you now have a scenario where there's like 1.5 to 2 jobs for every person looking for a job. And the problem with that is that it's going to push this AI type of thing, which eventually when people do need jobs, they're not going to be able to find them because you're going to have these robots doing a lot of this stuff. So it's kind of a scary thing that we're going through right now in terms of jobs. Yeah, you're right. You're right. It is. And what's so crazy is this, right? Is that inflation, weirdly enough, is being also driven by wages going up, right? So as people get more money, then they have that. Then the companies have to raise their prices for their goods so that they can pay these higher wages. So it's this weird kind of
like
connective.
Where's the middle ground?
Yeah, I mean, that's the question. Where's the middle ground? And you know, you just don't know where that is. I mean, is it to raise taxes on higher income earners? Is it to do, you know, how do you adjust that? And honestly, I don't know. I'm not going to pretend to know. But there has to be something figured. Yeah. So eventually the dollar is going to go bust. It will be a while from now, but the thing is, so my projections and my forecast for what it means is like, you get to a point where at some point the dollar is no longer the reserve currency of the world, right? And my guess is it's going to go towards the digital yuan, and the dollar so countries have to hold massive dollar reserves because they have to buy everything in dollars. As soon as the dollar is no longer the digital or the reserve currency of the world, they don't need to hold those dollars. They'll sell them on the open market. They'll dump them. That creates a massive decline in the dollar. The printing of money, the global debt, all of that stuff comes back to roost at that point. And I do think you get a scenario where the people of the U.S. and really globally will demand a new currency. Now, it may be called the dollar, 2.0. Who knows what it is? But I think it will have restrictions. So there'll be some sort of restrictions, and the people will demand this, where you cannot print endlessly amount. There'll be a stated run, or there'll be a slow expansion that's pre-stated, so everyone knows how many dollars there can totally be, or dollar 2.0. And I also think the Federal Reserve won't be in charge in their current form. So people will, there'll be a scapegoat essentially, and the politicians aren't going to take the blame. We know that. They'll push it on the Federal Reserve. And so eventually you'll have this scenario where I do think good comes from this, but it's going to be a long, hard road. Yeah, so I do think that eventually the Fed is going to introduce like a digital dollar, right? And then they're going to move towards that. But I still think that collapses because it's unsustainable, right? You just can't have something where you just print more and more. And then as you might give more people money, but then that just creates more inflation in the system and so forth. So, and then the dollar is worth less and less. And again, eventually you get to a Venezuela type situation where the dollar is worth almost nothing, or maybe not even what's printed on at that point. So at that point, I do think you get some sort of massive kind of reset. And it probably involves a Great Depression type thing. I mean, we know the 100-year cycle's coming up at the end of this decade from the 1929 crash of the stock market and the Great Depression of the 30s. And I am fearful that that might coincide. We saw the 100-year cycle with the Spanish flu and COVID too. So just keep that in mind. I mean, and they can't, right? I mean, a lot of people can't, and it's a horrendous scenario right now. And I think that's why the Fed is realizing this, right? So the Fed is realizing that they really screwed up by printing as much and pumping the stock market up and everything up, because asset bubbles just create inflation as well. And so now they're trying to bring it down to bring inflation in. The problem is, not only do you have still too much money in the system, but you also have the Russia invasion keeping oil prices high, which is inflationary, and the supply chain issues as well. So, I mean, it's all a mess right now. And you're right, there's a lot of people that do probably feel like it's a Great Depression right now. But what I'm talking about is like it'll be so bad. I mean, I think in the Great Depression, and I could be wrong, but I think it was like 30 or 40% unemployment. And I mean, I do fear that we could at some point get to that. I am in that camp. So we do have 4-year cycles. I mean, a lot of people were talking about how the cycles were getting elongated, but honestly, that hasn't been the case. It's been dead on to 4 years, basically. 2009, it was created. 2013 was the next top. 2017, 2021. So all we can do is look at history, and the history shows us that the bear market will last. So from peak to trough is usually about 12 months. We're already 6+ months in, so that's a good thing. And then usually the recovery comes in the next 6 months after, where it'll start to chop sideways and then begin to grind up. So I think, as far as the charts are telling me, it's basically we are in a bear market. Probably price still has downside to go, but look at it like you're going to get the best buying opportunity of your life.